Hi, my name is Kyle. I'm with McCaw Property Management, and we manage properties all over the Dallas-Fort Worth Metroplex. And one of the questions that we have coming up pretty often from our clients is that they're finding properties that are good deals, but they're having difficulties getting them financed, or they have so much work that's involved that it's very difficult to pull the deal together financially. So I've got my trusted advisor when it comes to mortgages and financing hard to finance deals, and he's going to talk about the ways to overcome that problem. So if you would kind of tell us about hard money.
Sure. My name is Cary Donham with Capital Concepts, and we provide rehab loans for distressed properties. So your best deals out in the market are typically going to be a property that is in disrepair. Someone that needs to unload that property because they can't sell it on the open market the way it is to a normal retail buyer. That means an investor is going to come in and buy that property at a steep discount. Well, typically those properties do not qualify for normal permanent financing, whether that's conventional or even a portfolio loan. So what we have to do is put a rehab loan in place or interim financing to bring that property up into a condition where it will meet the guidelines for a normal loan. Those loans are called hard money rehab loans, and we do those every day, all day long.
Okay, so some of the questions we get about hard money is, what would you hard money lend on and what would you not? Because a lot of people view hard money loans as risky and scary. So what would you lend on?
Well, number one, I say let every transaction stand on its own merits. We're not going to use hard money on every transaction, but the two-step process might save you money. For instance, if you're buying a house for $50,000 and you're putting $20,000 in repairs into it, your hard cost in that transaction is $70,000. Now let's say that the after repaired value when you get through with the rehab is going to be worth $100,000. On a hard money loan, the nice thing is I'll loan off of the after repaired value, not the purchase price. So I would loan up to 70%, which is $70,000, and in that case, Kyle, guess what? You would only bring closing to the table, which would be somewhere around maybe $5,000 on a deal like that. Very similar to one of your first transactions that we did.
That's an amazing. What he's hitting on is, instead of bringing we'll talk about my example. So I purchased a home a few years back. It was a distressed property, needed lots of work. I think at the time it was probably worth $80,000 or $90,000. I bought it for a certain price. Needed a lot of rehab, so I financed that with a hard money loan, the purchase and the rehab. I had to bring $5,000 to the table to close it. Got it fixed, refinanced it onto a Fannie Mae Freddie Mac mortgage. I got cash back at closing, so I was in less than $5,000. So now I've got it on a Fannie Mae Freddie Mac since 2008. I've got more equity in that deal than I owe on it, and it makes more per year on cash flow than my out-of-pocket was when I purchased it. So I would not have been able to do that if I didn't use hard money, because I would have had to pay $15,000 in rehab plus the 20% down, and that would have been, maybe $20,000 or $30,000 as opposed to less than $5,000. And so now I have control of that property. I rent it out. I make more than $400
cash
a
on
month.
cash return is more than 100%.
That's incredible. You can't do that with a traditional finance mortgage. So that's where hard money makes your yield much higher than a traditional finance property. So thank you for watching. This is hard money lending. So if you got any questions, certainly call myself or Cary. We'll put his contact information in the bottom.